Hi, I'm Tom Lydon, editor of ETF Trends, and I'm at the Morningstar Invest Conference in Chicago with Ken Volpert, manager of the Taxable Bond Group at Vanguard. Ken, thanks for being with us today.
Thanks,
Appreciate
Tom.
it.
Yeah, my pleasure.
Listen, there's been a huge chase for yield with interest rates at dismally low levels. Money market funds are paying nothing. Are you concerned about this chase for yield for the average investor, especially the average advisor that's trying to show better returns?
Yeah, I'm not that concerned about it if it's going into the corporate market, the investment grade corporate market. Okay. You know, I think what the Fed has been saying is they're going to be low for a really long time. Rates are going to stay low for a really long time. They keep pushing the time frame out further and further. Yep. So investors buying credit, you know, investment grade credit, something like a short-term bond funds and intermediate-term bond funds, I think is reasonable. Okay. But I think what concerns me is if they're going out the yield curve, out to 10 years and beyond to chase that yield, because that's where I think there could be a lot of risk down the road once we have an economy that does start gathering some steam. We're through the deleveraging cycle, then we could have considerable rise in risk.
Right. Well, what about high yield? We've seen billions of dollars move over there, and then also global markets, emerging markets. Again, competitive yields, concerning at all, or another form of diversification?
Yeah, well, I think with high yield, I think that they're actually not a very good diversifier, right? If the equity market sells off, the high yield market will sell off as well. Emerging markets, and also there's also this default risk in high yield. High yield has had a hard time earning its yield, so to speak, because there's been migration down into bankruptcy and high yield markets that actually cause the actual excess return earned in high yield to be less than the yield, the actual stated yield spread. In the emerging markets, actually, the fundamentals continue to be very positive for emerging markets, and so they are actually, you do earn the yield. Investors have earned the yield over time, and we would expect that would continue going forward.
As we head into the end of the year and advisors are positioning client portfolios for 2013 and beyond, what do you see the biggest opportunities in fixed income space, and what are the potholes that might be coming that we need to avoid?
Right. I think the big issue in the near term is this fiscal cliff. You know, what happens with the $600 billion of tax increases and spending cuts that are going to hit starting in 2013, and how does Congress and the President kind of navigate that? You know, our suspicion is that we're probably going to go over the cliff for a little while, for a month or two, and there's going to be a lot of uncertainty going into year end. So it wouldn't surprise me that there's a lot of volatility in the equity markets, a lot of volatility in the fixed income markets as well. So I would encourage investors not to kind of panic, you know, when they experience that volatility and do something they'll regret. But we will ultimately get through this, and hopefully the new Congress will be able to work up some longer term plans to try to get our longer term deficits in line.
Ken, thank you very much. This is Tom Lydon with ETF Trends. I've been with Ken Volpert with Vanguard Group.